JJ the CPA here. Hope you're doing well. So seems like we got a lot of misinformation out there. I wanted to just immediately dive into this. We're hearing information that the law change related to the ERTC, no longer requiring for your gross receipts to be down. There was no law change, but I'm going to clarify that for you. Many are under the impression that if your business was affected due to suppliers, that you qualify only if your supplier was under a governmental order to shut down, and that governmental order to shut down had a more than nominal effect to your business. So I'm going to give you a link and I'm going to walk through some very specifics here, but in the body of this, I'm going to give you a link to the IRS notices that the IRS has put out related to the ERTC. There's several of them. I'm going to be referencing IRS Notice 2021-20. And so really you could pause this video and then go to the link in the body of this video and pull up that, and you could follow along while I'm going through a few things, which I'm going to do quickly, but you'd be able to see and read the more of the details related to that. Also, I just going to mention to you, related to this ERTC, you can get this yourself. It's not that hard. I mean, you either qualify or you don't. It's not a mystery. And if you qualify, you take your wages, you take it by the percentage, you fill out a Form 941X, and you send it in. It might take a little bit of time, but you don't need to be afraid of it. What you do need to be cautious of is following the lead of somebody, especially if you don't know them. I don't care how qualified you think they are. If you don't know them, antenna up. You need to ensure that if you're taking advantage of the ERTC, that you actually qualify. And guess what? These IRS notices, they're written in English, believe it or not. And there's a font. The font size is easily able to be read. It's on normal paper. The font is also a normal font that I'm having fun with you. All I'm saying is I get it as a tax professional CPA doing this for 30 years. Many times we just immediately go into the mindset of like, well, I don't know if I understand this stuff. What I'm trying to reassure you is the IRS has gone out of their way, especially in IRS Notice 2021-20 that you have a link to really put this in what we would say is layman terms, meaning easy to understand with lots and lots of examples. And after you read the sections or all of it, I really doubt you're going to be confused on much. But I will tell you this, if you do qualify and you think that you can go and get it, you can do this yourself. Now, as an aid to you, I have a seminar that for 3 hours of a seminar, instant access. I give you examples and spreadsheets and Excel spreadsheets. I give you links to everything. I show you step by step on how to fill out the Form 941X. I got 2 videos to just walk you through the calculation as well as then that 941X. So you can get this yourself. How much time would you spend to get 10 grand back, 20 grand back, 50 grand or 70 grand or whatever dollar amount you're being told? You would spend some time on that. Regardless, you need to be cautious and aware. So when you look at IRS Notice 2021-20, if you go to page 7, you will see that from the beginning, there's been 2 ways to qualify for the Employee Retention Tax Credit. One way is your gross receipts are down. The second way is that you are shut down due to governmental order. That's in essence creating a partial or full shutdown. So since the beginning, literally since the beginning of the CARES Act, those are the 2 ways that you qualify. So if you are hearing from somebody, hey, they changed the law, you no longer have to have your gross receipts down. Well, first of all, they showed you their hand because that's somebody that's really not educated or intelligent as it relates to the ERTC, because no law changed, period. The law has been the law. What happened in the end of December is that the law now allows you to get it into 2021. The law allows you to get it even if you got PPP, but there's never been a change to these 2 qualifications. So you can read about it right there on page 7. It's an either or. Also, if you're doing this and you have multiple businesses, you better be very aware of the rules related to aggregating these businesses starting on page 1 of this notice. The other is then these governmental orders. So the IRS in that notice from page 24 to page 44 covers in wonderful detail, in wonderful examples, and I'm being very complimentary because they went out of their way to make this where anybody can understand it. But in those 20 pages, they have 12 questions with 12 answers that would directly contradict, it seems to be some popular misinformation going around. So the first thing I want you to note is that when you're looking at a partial shutdown or you're looking at a full shutdown, I want you to look at page 34. I want you to look at questions 17 and 18 and the answers related to that. After you read that, you're going to have a clearer understanding. Well, what is a partial or a full shutdown? It really shouldn't be a mystery. Were you shut down? Okay. But what it more makes clear as well, when we go to page 43, you go to question number 22 that talks about, well, if you're shut down, misinformation is, well, then you get the credit for the entire quarter. Well, when you actually read the full answer, which is actually just another sentence, I think it's only 2 sentences. When you read the second sentence, it says that when you have a partial or full shutdown, the wages that qualify for the ERTC are not for the entire quarter. The wages that qualify are only during the period of the exact dates of shutdown. So if you're being told that if your business was affected and you did have a governmental shutdown, okay, but only during those exact days. I also want you to look at page 28, question 12, when you're looking at these governmental orders. So with that, we talk about, does a supplier cause you to be able to qualify? Well, the IRS indicates that if you have a supplier and they're shut down by governmental order, and due to that shutdown, that had a direct effect in you getting you getting your supplies, and it had more than a nominal effect on your business, then it could qualify. But the IRS goes out of their way to really show you some examples. They gave a simple one. If your business is an automobile repair shop and your supplier of providing critical parts has shut down due to governmental order, and therefore you were not able to conduct business, your business was affected in more than a nominal way, meaning you had an effect, not I didn't know I was in effect, this person told me that. Oh, gee golly, no, you would know. Then that supplier could. So they indicate that if that supplier, in their example, is shut down due to governmental order, and then due to that shutdown, they couldn't get something to that repair shop, and that repair shop then was affected, then that repair shop could, in essence, be qualifying for the ERTC, but it's only going to be during the days that they're also affected. So what you have to really be mindful of here is that anything related to a qualifying event that is not related to your gross receipts being down, it has to be due to governmental order. And I'm telling you, pages 24 through 44, they run through everything you could possibly think of. What is a governmental order? What qualifies as one? Is it partial? Is it full? What does it matter? What if your hours were reduced? What if your customers were affected? What amount of time is included? Really, if you read through that, right? Now, that might be the most exciting thing to read through, but it could be information that saves you penalties. So if you get a $100,000 employee retention tax credit and you get it in properly and you have to pay it back, you'll be looking at a 5% underpayment penalty, a 5% late payment penalty, a 5% penalty for, in essence, doing it wrong. You're going to pay interest, and you might be subject to probably a 25% penalty for making, in essence, a material misstatement. So you're going to pay back that $100,000 with maybe a $50,000 penalty. So is it worth it for you to be ignorant? No. Is it worth it to read this? Yeah. So also, I just want to mention to you that the IRS Notice 21-49, if you're getting told that you qualify as an owner, well, if you own 50% or less, maybe, but you got to add all your family members together to determine constructive ownership. But you can look on page 25 through 31 of IRS Notice 21-49. If you're interested in what a recovery startup business, because somebody's now convinced you qualify saying you're that, well, you can get the full description of what that is in very layman terms. IRS Notice 21-49, look on page 6. And then many are not telling you this, but it does have a tax effect, meaning when you get the employee retention tax credit, the year in which you deducted those wages that yielded the tax credit is the year you have to go back and amend your income tax return and reduce down your deduction by that credit amount. So if you're going and getting a credit right now, and you then are yippee and yaying and you're excited that you're going to get $100,000 employee retention tax credit. Well, I'm excited for you too, especially if you're getting it correctly, right? Or hopefully. But if that is going back to wages that you paid in 2020 during a qualifying period in 2020, so you got a $100,000 employee retention tax credit, the IRS is requiring you to go back to 2020 and reduce down your deductions by the $100,000. And you don't get to wait until you get the money. So that's an IRS Notice 21-49. Right there on page 24, the IRS makes it crystal clear. You don't have to be a tax pro to understand what it's saying to you there. They say it under no certain terms. Or if you're doing the 941X and you're getting the ERTC for amounts that you paid in wages in 21 and you're filing it now, whether you filed it in 22, whether you file in 23, whether you file in 24, okay, the year that you have to make the adjustment for income tax purposes would be 21. So you have to be aware of these things. So if you're working with somebody, you got to make sure they're working in concert with your tax professional that's also doing your income tax return, because you're going to owe tax on it, right? That seems weird. I get a $100,000 employee retention tax credit. The IRS is going to send you $100,000. When? Well, 6 months, 9 months, 3 months. It's going to be a while. But when you apply for it, now the IRS is expecting you to go and amend your return. And depending on your tax rate, you may owe $30,000 in taxes pretty easily, right? So you got to come up with the $30,000 that you owe in taxes, okay? And you're waiting for the check to come from the IRS, and maybe you're having to pay someone to help you put that credit together. So be aware, which I'm giving you the tools to be aware. So check out my seminar. I walk you through it A to Z, how to do the 941X, everything. I've got a playlist. I'll give you a link to that. I've got a video also that's the 18 myths. So I go through a bunch of other things, the 18 myths that we're hearing related to the employee retention tax credit. So I'm a CPA, been practicing for 30 years, still do. My entire career's been in tax, and I've helped many get the employee retention tax credit correctly. And the key here is that inform yourself, be ready to defend your position. The IRS has announced that 90% of their auditors are now going to be geared towards reviewing the employee retention tax credit. The IRS has warned the public at large for third-party payers. I'll give you a link to that. So, all right, hey, if you made it to here, I sure appreciate you. If you're not a subscriber, I'd love it if you'd click it. All right, hey, thanks for tuning in. Again, I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.